Hello everyone. This is the third installment of PumpWatch. We're going to try this again. This time is different. All right? This time is different. And I have a good feeling about this bottom, where we are in the market, and the likelihood, the very strong likelihood of getting an important move in altcoins specifically. All right. So we're going to talk about that today. We're going to talk about where the market is on a high time frame. Excuse me. I like using these live scenarios. I don't do many live shows, but when I do, I like giving, the high time frame view that I don't typically give during the regular shows. So I'm gonna do a little bit of that. I'm just gonna take some questions. Remember, please don't ask for specific altcoin requests. I haven't done that in a long time, years. If you have any specific altcoin requests, excuse me, please make them through the services that I offer, either single asset analysis or crypto portfolio mentorship and consultation service. Otherwise, I'm going to look at Bitcoin. I'm going to look at the others chart, right? Kind of an approximation of what altcoins are doing, and I'm gonna look at Bitcoin dominance, but I'm not going to I'm not going to entertain any specific altcoin requests, right? All right. So first, let's just have a quick look at and make sure that everything's working properly. Let's see. I think we should be good. Ollie Oi Oi says still wrecked. Alright, great. We've got trolls in here, awesome. But at least I know that messages are making their way through. It's so funny how the people who seem to be my largest detractors seem to be the biggest fans of the channel, the most loyal supporters, insofar as they always show up. Thanks for showing up, Ollie Oi Oi. Gaming Land M. Hello, Dean. Hello, Gaming Land M. Arian RH2FH. Hi, Dean. Hi, Arian. Arian. Sorry if I'm mispronouncing your name. Welcome. So Arian asks, you think this is the pump back to 100K, or will BTC sweep the lows again? No. Yeah, I guess let me not assume that everybody knows my most recent my analysis, my small time frame analysis. My high time frame analysis has been the same for like a month, right? High time frame analysis has been that we should expect small move up, larger move down, larger move up, and that's been true for some time, and that's still what I'm seeing. That green box right there is where I see Bitcoin going. So just to answer your question, Arian, I'm expecting Bitcoin to continue to the upside to around this point between 74 and 78, at which point we find some resistance and then come back down, sweep these lows, because there is a very important level of liquidity that has to be recaptured. Absolutely has to be recaptured down here. And just in short, one of the reasons that is because if you pull your Fibonacci levels from everything that happened here, right, pretty much all of February, you can see right here. Do you see how you hit the 0.74? Not many people use the 0.74. That's something that over a long period of just testing, back testing, I figured the 0.74 is very important. 0.74 is actually, not many people know, that is the phi ratio in base 12 math. If you calculate the phi ratio using base 12 math, I believe you get the 0.74. And what I've noticed in my personal research is that the 0.74, once that's hit, you have to come to the 7.86 at the very least. It's pretty much, so the idea is this. In Elliott wave analysis, you have the 0.618, which represents a phi ratio, you know, the golden pocket maximum retracement for a move in a zigzag, a B wave of a zigzag, or wave 2 of a purely impulsive move. That's typically the area of support that you get before continuation, like I said, in a zigzag or pure wave 1, wave 2, pure impulse. You can wick below the 0.618, okay, and this has always been my issue or my challenge, like in doing analysis and trading. Okay, are we wicking down below the 618? How much can you wick down below the 618? Okay, it took me years to answer that question. The answer, based off of everything I've ever seen, and this is years of tracking this, and I've put it, like, it's never failed, not once, on the small time frame, high time frame. If you go beyond the 0.74, you're going to wick beyond, you're going to break the phi ratio, you're going to, it's basically the difference between a zigzag and a flat correction. Maybe I'm getting a bit too technical, but essentially all this means, because the 0.74 is hit, I know without a shadow of a doubt it hasn't failed yet, right? I'm always, you know, jury's still out. But in all my years of tracking this, based off of all of that data, the price is coming down to 7.86. The price is coming down to 0.786. So that would be around 62. So all I'm saying is, whatever happens here, you're coming back down here with a high degree of probability to fill that liquidity before then moving up to the 100K region. That's the long answer to that question. So, and that is my most recent analysis. Oh, okay. Let's see. So Gaming Land M says, why is the green box a target based on what? Okay, that's a good question. Fair enough. Let's go over that really quickly. So the green box is the height or the extent of this move. If you look, this is the bounce on February 5th. All of this is the counter, and this is the completion of this bounce. Think flavors of 3. I think in that respect, Elliott wave is super helpful. When you think corrective patterns, think flavors of 3, variations of 3, motions of 3, however you want to express that. And in that case, you can see the big bounce on February 5th, followed by a bunch of consolidation that lasted about a month. And what we're experiencing now is the final leg of this corrective move. Do you see what I mean? So that's one way to ascertain the green box. If you look at all of this as being some type of zigzag, you can take your Fibonacci extension tool from the bottom of February 5th to the orthodox high, all the way down to the orthodox low here, and you see between the 1 and 1, 2, 3, 6, you see the green box. So if you just look up any manual of Elliott wave analysis, and you can see what a a typical zigzag ABC. So like if let's just draw it out really quickly. If you take the A wave, B wave, C wave, and let's assume that that's a correct read on this price action of 30 plus days, your C wave extends to between the 1 and the 1, 2, 3, 6. So that's the first reason you could say that you should be looking between 74 and 78K. That's why the green box is there. That's one way to do it. You can get some confluence by doing some pattern analysis and looking, okay, what's the height of this? Superimpose this from the site of breakout. You can say the site of breakout is approximately the midline of this falling wedge, or you can say even the site of breakout is the bottom of the falling wedge. I'm not exactly sure how it's done in pattern analysis in pattern analysis orthodoxy, but I would just say the green box still stands. That is still some confluence, right? Using Elliott wave analysis in the first way, then using just simple pattern analysis, and then lastly, just zooming out and seeing, okay, what are we dealing with here? Let's say we get some semblance of a breakout from this falling wedge that lasted about 30 days, right? Some semblance of a breakout here. Where's the next level of resistance? There's clearly an order block here, a selling block, right? This is resistance right here. So you would just assume that whenever the price gets up here, it finds some resistance, and you see the green rectangle is confluent with that order block. So you could just do order blocks, you could do Elliott wave, you can do pattern analysis. And this is kind of why I take exception with the criticism. Criticism is fine, but when people say, oh, you shouldn't just use Elliott wave, then you're not ever listening to any of my analysis. I always look for confluence. Always look for confluence in, and obviously I don't just know Elliott wave, but like, you know, simple support and resistance, order blocks, pattern analysis. You want to find the most confluence possible to put your hard-earned money on a trade. You know, so that's why I've got the green box. I'm seeing this as the exhaustion of this micro trend. But again, the store isn't Bitcoin, because this is all corrective, and once you finish that, you probably go into something like this before running up and finally executing this play right here, which would be your first leg of this larger move. Do you see? I've got this three-wave pattern like this. So this you can think of as the base of this move to around 103, 105. Okay, so that's what I'm seeing. But I do see some volatility, a lot of volatility, because after we make our way here, we come down here, we go up here, we come all the way back down, and then up again, in my estimation. And we'll see. Excuse me. I wasn't coughing before I started recording. I don't know why. All right. 6473 says, I don't think he was trolling, just more so talking about his portfolio. Perhaps we will be less wrecked soon. No clue. Trolling or not, thanks for showing up. Aryan says, by the way, yeah, do you watch other analysts? I noticed your scenario of a low into high to the 100K is similar to what Ron Walker is speculating on, in case you know his channel. I don't. These days I don't. I'm just too busy. I think it's a great way to learn. I would say watch as much analysis as you can when you're learning and you're formulating your own style and your workflow and how to think of the market. I watched everybody, absolutely everybody, BitBoy, Sheldon Sniper, people who do only fundamental analysis like Ran Uner. I watched some of, think of the analyst on YouTube. I watched it. I devoured it. And what I found was a lot of people were inconsistent, not necessarily in the result, but the method. A lot of people focus on the result and they're like, oh, you're wrong. But what I look for in good analysis is a good methodology, because you should assume within this business, there's so much inherent in our business is being wrong. Like, you have to be comfortable with being wrong, especially on the small time frame. And that is assumed. It's not a task of certainty. It's a probabilistic exercise, and it's all about controlling, managing risk and probability and finding the highest probability. So like when people are, oh, you're wrong, like they don't even know how to properly, I would say, evaluate analysis. Like, good analysis to me, when I look at another, I would look at Jason, I forget his last name. Jason, the guy with the Pikachu hat. I always look, are you consistent in your analysis, in your methodology? Are you saying things that are fundamentally sound? Are the building blocks of your explanation? Are you just saying things? Like, for instance, I was asked by Gaming Land M, why the green box? If I can't tell you, or I'm just guesstimating whether I'm right or wrong, that's bad analysis, because that's not an analysis. That's just guessing and talking out of my ass, right? But if I have like sound methodology and based off of sound theoretical data or like analysis, like this is, we know this, ergo that is likely based on what I'm reading in the price action, then for me that's good analysis. And there are some good analysts out there. I don't think there are many. It's hard. It's really fucking hard. I've been doing this for almost a decade. Yeah, anyway. Gaming Land M says, relating to my previous question, C-Wave, what I know extends to the 1618 fib area, 1 or less common. No, 121236. If it's an ABC correction, the typical extension of C is 1 to 1236. You can indeed get 1618 extensions, but the typical extension, just, the by the book extension for C-Wave in a corrective move is 1 to 1236. That's pretty standard. All right. So let's move on. So that's good. Great questions. We talked about what we expect for Bitcoin, why Bitcoin's kind of rate limited, not that much upside. And then also something I mentioned in the previous video, if you look, you can't expect something that's based so correctively to go up too high. You just can't expect it. Look at this. And I keep pointing this out. This is a flat base. That is not how a big move, a pure impulsive move, is structured. That's why we call it a flat correction. People, why flat correction? Because it has a flat base. It looks flat. So you see, you come up, you come down. What you're likely to do, what you're likely to do is continue that and then retrace. The minimum retracement for a flat correction we know is 0.786 Fibonacci extension, but coming back down here doesn't mean anything. The liquidity is over here. If you're going to reverse to the upside, you have to come all the way down here. This is the order block. This is the buy right here. excuse me, in this region. Okay, so that's the other reason. Just eyeballing the structure. So that's Bitcoin. Not that much to write home about. You know, this is PumpWatch. What's PumpWatch? PumpWatch is, I'm getting excited because I see a window of opportunity for a pump. And that's not something that we've seen very often in the recent past. And when I say PumpWatch, it's not in reference to Bitcoin's price action. Bitcoin is not the story here. Bitcoin, we do not and should not expect to go up that much more. Like I said yesterday, you should start thinking of taking profits on whatever positions in this region. That should be one of your indicators. That should be one of your alarms. Like, okay, get ready to take profit. Okay? Because Bitcoin has reached exhaustion in this green box. That's my plan, personally. Could be wrong, but based off my analysis that I just propounded, that is the area that I'm starting to pay attention to take profit, and schemes, making sure my targets are faithful and are going to get hit. Excuse me. All right, the story here is altcoins. The story is altcoins, and let's zoom out for a second. So this is the third PumpWatch, and we've gotten, before this, we were a little bit excited about the prospect of Bitcoin pumping at this level right here. Once we hit this. No, was it? Where was it? Oh, no, it was right here. Sorry. Because that was the midline. And the midline of this falling wedge, 80-day channel, basic channel trading, the midline is where you break the channel, either up or down. You need to retest the midline. And we hadn't done that. We seem to have done that. I think PumpWatch 1 was here. I thought that was a sufficient midline retest. We started going up. I was like, all right, that's it. That's it. Now we just have to retest the top of the channel and then sayonara. That didn't happen. We came back down. Again, look. Fundamentally, there is nothing wrong. And I probably would have called it again. This is tricky as hell. And this is why this whole exercise is an exercise in probability. Because there's no fundamental technical, let me choose my words carefully. There's no technical reason why we didn't break out on December 23rd. That's your Santa rally, that's the Q4 rally. Everything's perfect. The others chart retested the midline, pumping out of the midline. That's where you break the channel. You break out from that, you retest the top of the channel, and then you're gone. That didn't happen. Instead, we broke back into the channel. That is not something you see every day. That's a low probability. That's a low probabilistic outcome. And it's not because I don't want to do mea culpa. I'm just saying, go do the fucking back test. Look at every channel, falling wedge. And on the high time frame, small time frame, how do those break out? What do they look like upon breakout? Well, they typically look like a midline retest up, test the top of the channel, and you go. Does this happen? Sometimes, but it's a smaller percentage, smaller probability. In any case, that was the first PumpWatch. That was the first time I got super excited, and obviously it was wrong. Devastating breakback. Now, back to the bottom of the channel in altcoins, yeah? And again, this is all centering around this 80-day falling wedge. It's probably more than 80 days at this point, but it was 80 days at the time. So if you can imagine, if that was 80 days, this is probably 100 days or something like that. But, you know, it works in so many ways. You know, you don't have to even know channel trading, but just basic technical analysis. You go up, down, up. Again, flavor of 3. Okay? So now, February of this year, we retest, the beginning of February, we retest the bottom of that channel. That is the basic level. That's the basement. That's the lowest level. That's the level that you hit back in October. The big October flush. That's the same level. You picked up that liquidity again. Okay, and that's fine. Now you come all the way back down. Now what are you doing? You're finding a way to move up and out of this channel. Do you see why I'm excited? I love explaining why. This is why my videos are long. They're not 5 minutes. I can tell you what I think, what the targets are, but that's not interesting. One, you don't learn like that. Nobody learns like that. And when I, like I said, was learning, I watched and watched and watched, and I was looking for things like this. I was looking for methodology. I was looking for reasoning. Whether they're right or wrong, it doesn't matter to me, because, you know, you can't know the future. But tell me, like, how channels trade and how they break out, right? I learned that from, what's his name? I forget his name, but he's at Chart Champions. Very good small time frame trader. An excellent small time frame trader. I took channel trading from him. He like broke it down and I studied it. And in any case, this is, I think, what's useful about going on YouTube. Not necessarily it's gonna pump or it's gonna dump. That's not useful. You're right, you're wrong. You know, yeah, obviously, if you're always wrong, there's something wrong. But then you have to look, all right, what are you looking at? My high time frame read's always been the same. This right here is your A wave. All of this is your B wave or your X wave. It doesn't matter, right? This is either your W wave or your A wave. This is either your B wave or your X wave. And then this is either your Y wave or your C wave. And that's the start. So that's been the idea. So again, pump watch number 1 was a failure. We didn't pump. Pump watch number 2, I think it was here. I thought that's the midline retest. Broke down. But now I want to focus on everything that's happened from February onwards. And I hope you understand why I want to do that. I hope you understand why I want to do that. Because technically speaking, everything since the beginning of February, I'm going to use this word, I know it's technically or semantically not what it means, but like everything since February has been a matriculation up and through this 100+ day channel. Okay, I'm going to take a break before zooming in and just look at if there's any questions. So Olioy says yes. I'm not exactly sure. Yes to what? 6473N says, can you review your others midterm long-term thesis? I haven't turned it on for a bit. I may have missed it. Yeah, I'm doing that right now. Gaming Land M says, what do you consider a sufficient midline retest? Last time we got tricked. Exactly. And that is the question. And that's exactly the question I posed to myself after that last trick. And I was like, what the fuck? I thought that was it. It's really hard to know. Let's actually look at that really quickly. Craig Beats says it's rough out here in these crypto streets. Gaming Land M says the move up from last failed breakout looks kind of choppy. Wouldn't that give us a hint that the breakout will fail? Juan says chart champions could be Igor or Severin. No. It's the really arrogant British dude. I forget his name. He's an excellent short time frame trader. His strength, and I think everybody has a strength. For instance, I would say the best person at using market cipher is not Face. It's not crypto Face, but it's what's his name? Pikachu hat. I haven't watched him in a long time, but the guy who wears a Pikachu hat, he's the best at using market cipher. Crypto Face is probably one of the most entertaining traders, but he's not the best at using his own product. And the guy with the Pikachu hat, oh, how do I not remember his name? He's really good at hedging. He's one of the best hedge traders I've seen. He always enters both a long and a short simultaneously. I hate that, but everybody has their own style, and he's really good at it. And then I would say the arrogant British dude from Chart Champions, he's probably one of the best short time frame traders that uses order blocks and order flow. He's like one of the best order flow traders. Order books. Sorry, he's really good with the order books. So that's short time frame stuff. I think I'm sometimes shocked at how he doesn't see high time frame things. He sees them sometimes, but a lot of times he doesn't. Yeah. It's hard. This is really hard. It's very. I don't criticize anybody because it's so hard. It's funny. The longer you spend in this space, the less critical you get of your peers because it's impossibly difficult. Of course, and I'll say this before I get to this question, I want to talk about this. I think that is a great fucking question. Before I talk about that, I want to say when we get into the bull market and things start going impulsively, everybody's a genius. It's hard to distinguish people who know basic technical analysis and people who know nothing because pretty much everybody's winning. And so in the bear market, I would say is probably some of the best time to determine who actually knows how to trade. And when I say the bear market, I'm speaking specifically about the consolidative bear market, not the bear market where it's just going down, because that's also easier. Whenever the market's trending either up or down, it's pretty simple. The sideways is where I think the pros show up. But even then, some of the best traders I know are great not because they can read the consolidative sideways stuff, it's because they recognize it and they know it's a no trade zone and they can go years without touching. That I would consider high mastery in trading. High mastery. Very, very, very few can do that. They have the discipline to recognize, the understanding and discipline to recognize sideways consolidative price action. They can go years, and I'm not exaggerating, they can go years without making a trade. And as soon as the market is decisive and clear in exhibiting impulsive price action, they get back in. That to me is probably as impressive, if not more impressive, than those who can tell you what's going on during the sideways stuff. I think both are equally wildly impressive. But that's, to me, the highest grade of trading, highest grade of chart analysis. But again, it's hard to judge good price or chart analysis unless you study price analysis, chart analysis. A lot of people don't know anything about chart analysis, and so the best analyst in the world can be, propounding their analysis, and they won't even know. They wouldn't be able to tell. It's a very, very, very tough business. In any case, JY says, I'll never forget your great call on Bonk. I don't even remember, man. Let the real bull run begin. Yeah, let's let that happen, man. All right, let's talk about this midline question, because this is exactly, I think this is exactly the question I asked myself. And I would say one of the things I love about trading is you never stop learning. Never stop learning. There's always something else. So that question, what constitutes a proper midline retest, is exactly what I asked myself. So let's go here. And the first thing I'll say is this. When you say midline retest, you always, I think it's a game with yourself. It's a psychological game. The first thing is, don't assume anything. And it's hard not to assume anything because that's how we typically operate. Like, you take a step, you assume you're going to hit solid ground, and so you take another step. If you had to think, oh, maybe the ground's not going to be there and it's going to be waves instead of particles, right? So I don't know if I should take this next step. You can't operate like that. We operate every day on assumptions. We assume so many things. So when I wrote in my trading journal, don't assume anything, it's like, how do you even operate like that? But it's an exercise. It's tough, but you have to do that. The first assumption when you say, oh, what qualifies as a legitimate midline retest is your channel legitimate? Is it well drawn? Who's to say your channel is exactly what it should be? I.e., who's to say that that midline is the midline that you intend to depict, right? That's the first assumption you should make. Or that's the first sort of question you should pose, and not assume, even though your channel seems like it's legit and it's catching all the resistances and all the support levels, even though all that may be true, in the back of your mind saying, maybe I'm misdrawing it or I'm not drawing it properly. All right, that's the first thing. The second thing is, zooming in, Jason Casper is the Pikachu guy's hat name. And sometimes he pops in. Jason Casper. Excellent market cipher trader, I would say. One of the best that I've seen using market cipher. He knows that indicator. And when I talk about indicators and mastering your indicator, he's mastered that indicator. Indicators aren't my thing, but if they're your thing, you have to master them. And he's mastered that. As well as, like I said, the hedge trading. He calls them schlongs, short and longs. Anyway, that to me was a legitimate midline retest. And there's no hard and fast rule that says you have to close X daily candle or you have to close X 4 hourly candle. All of those things that people say are, it's just words. There's no rule anywhere. There's no like, this has to be. It is all complete like preference. If we close a daily candle at this level, then no, that's all completely, what's the word I'm looking for? It's just preference. It's just, there's a word for this where there's no truth in it other than that's what you want. It seems to be kind of like, I can't figure out the word, but you know what I mean. In any case, you would think that would be a legitimate midline retest, but apparently not. And then I look back and I'm like, oh, did I miss the fact that there's a flat correction here? But no, because you can flat correct at the midline, break out, and then 786 retest the top. So I've seen midline retests look like that, so I don't think that's necessarily disqualifying. Let's go back now, or let's move forward, and now let's look at this bottom retest. I like this bottom retest. One of the reasons I like it is because it's a big fucking bullish hammer candle, which tells me that's how you retest a level. I love bullish hammer candles retesting levels of liquidity, right? The buyers step in quickly. I like that. So I'm comfortable with that retest of the bottom. But I also am aware that not every retest of every key level is that decisive, is that clean and clear. Now, let's look and see. Here, do you have a midline retest? Absolutely not, which is why I have this coming in. So, in this, I talked about yesterday, there's a little nuance in my call to be bullish on altcoins right now. Doesn't mean I'm seeing a midline retest. There's no midline retest to speak of. You can see very clearly the bottom of the channel is tested, and we've moved to the top, broken out of the top, hovering around the top, and eventually I see us breaking back down into the channel and making once and for all that decisive midline retest. Now that hasn't happened, and you may be wondering, then why the hell are you bullish if there's no midline retest? It's because there still is a move to be had here. This right here was an initial breakup structure of this move right here. This is your counter, and it has to finish up here somewhere, hit this level of resistance before rejecting back down here. So when you look at the Bitcoin chart and you see that rejection back down to 60K, those levels of liquidity, you can see something similar on this others chart. You come up a little bit, small move up, bigger move down, larger move up. That's been my analysis for about a month. It hasn't changed. I've just been kind of trying to suss out the smaller time frame price action. Now, given that altcoins based off of this others chart are likely to head up maybe 10% if we're lucky as per this other chart, then why the hell are we on PumpWatch? 10% is not a pump. And this is the tricky bit, because you can't you can't assume that this indicator, and again, it's an indicator, this right here, this others chart, which is all the altcoins minus the top 10 and market cap, averaged down, normalized. It's an indicator. And what do I always say about indicators? They're good, but they're not price action. They all come with their own blind spots, their own limitations. And you have to master your indicator, i.e., understand the limitations of whatever indicators you're using and still use them, but be cognizant of the limitations. One of the limitations of the others chart, it's not a faithful representation of all of the altcoins in crypto. It just isn't. And so even though this chart is showing a minor move to the upside before a larger move to the downside for our midline retest, I'm still on PumpWatch, because looking at specific altcoin charts, you can see that these charts look different. The past 30 days look different. You look at a lot of bullish altcoin charts and they look like this. And that is what I'm on PumpWatch for. The past 30 days of a lot of bullish altcoins look like that, not like this. So what would this mean is you should see outperformance of altcoins, not all altcoins, but some bullish altcoins that are ready to move. You should see outperformance very starkly of those assets vis-a-vis Bitcoin, okay? And you've already seen some, and I talked about one such altcoin in the watch list that I trade with my clients that went 250%, and it's, you know, it's one small move up from hitting our target, a 300% move. That happened. You see others, another one went up 40% yesterday, and it's retracing, ready to hit the next leg and hit its, you know, few 100% gains. You're seeing it, but you're not seeing it here. But again, remember, this is just an indicator. We use it, but understand the limitations. That's why I'm on PumpWatch. Now, so a higher time frame, to answer the question, this right here, I thought was a legitimate midline retest. And I always say, after winning a trade, losing a trade, I always do an autopsy. Well, losing a trade, I do an autopsy. Missing a call, I do an autopsy. What did I miss? Why was I so off, or whatever? And to be honest, this is a low probability breakback into the channel, and that to me doesn't seem like an illegitimate midline retest. So, you know, just chalk that up. I personally chalk that up to, that's just the breaks, and that's what the market does sometimes. And this is why it's an exercise in probability. No matter how good you are in reading certain patterns, no matter how high the probability of breakout is, could be 70, 80, 85%, there's still a chance that it breaks in, or it breaks down. Okay, so that's answering that question. Yeah, myth of closing candles. It's not so much a myth, it's just I had the word. In any case, it's a word that basically means it's not, there's no hard fact behind why this has to happen. And people act as if it is like a rule. Like, no, if I backtest a daily candle, daily close over that, it doesn't necessarily mean that you're going to get a breakout or you're going to get a breakdown. It's like an ad hoc thing. It's an ad hoc sort of a rule, but that's not the word I'm looking for. In any case, I don't know why it hasn't come to me, but you guys get the idea. Okay, in any case, if I'm correct, and we are indeed looking at some sort of, if I'm correct, and we're looking at some sort of outperformance for altcoins, not all altcoins, but some altcoins, and even some high market cap altcoins, then what we should see is a fall of Bitcoin dominance. This is why I made a big deal about Bitcoin dominance in the last episode and the episode before that. Let's look at that. And so, obviously, I'm not going to do specific altcoin analyses, like I said in the beginning of the stream. Like, you know, if you're interested on my take on X altcoin, you want me to, you know, do a work up of, you know, whatever specific altcoin you're trading, that's, you know, those are the services that, you know, I make a living off of. Single asset analysis is just, you know, you want me to look at one asset, you want me to look at one altcoin, you just make that order, and about 4 to 6 hours, you'll get that that analysis in your inbox pre-recorded. And crypto portfolio mentorship and consultation, those are the clients that I trade entire portfolios with, and then I give regular systematic updates to, and that is the full service. But besides that, on public YouTube these days, I'm only looking at Bitcoin and general indicators, liquidity. We can look at, coin glass indicators or liquidity charts. We can look at this other chart, Bitcoin dominance, but I'm not going to go into the things that I sell and make a living off of. I hope that helps. Okay, so if we're correct, what we should see is this Bitcoin dominance fall. It has to be reflected in the Bitcoin dominance chart. And I say that very carefully, reflected. Because remember, Bitcoin dominance is an indicator, meaning it's taking raw data. That raw data is the market cap figures of all of the altcoins and Bitcoin's market cap, and pitting them together and charting them and seeing, okay, who's growing faster. So that's the idea here. And if you can see, my main area of focus for Bitcoin dominance has been this 100+ day channel in green. And again, it's basic channel trading 101. Right or wrong, I always say this, people who complain about my analysis, that's lazy. If I'm wrong, you know what you should do? Tell me what is wrong about my analysis. Not if I got it wrong. Like, I'm not God. I'm not going to know the future, nor should any other analyst know the future. But where people should be criticized is if they say, oh, this flat correction retraced to 0.618. No, that's wrong. That's wrong. I can check that. I can verify that. That's theoretically wrong. That's nonsense. Or like this ABC this ABC move is going to go and stop and never come back because it's pure impulse. No, that's wrong, because ABC understands that it's corrective. It's not pure impulse. Do you see what I mean? The idea, and it's been the idea for a while, is that this channel was going to go side to side, up and down, and ultimately, just like every other channel that you've ever seen, and you can backtest this. This is what I'm saying. Don't be lazy. Backtest. You can go ahead and talk shit, criticize, do whatever you want. It doesn't really matter. What's important is you leave here with something. You leave here understanding something that you can actually monetize, that you can use, that can help you make money, that can help you read a chart. Or else, why the hell are you watching, right? I keep telling you, and this is not my opinion, this is what I've seen over the span of many years, and I've never seen anything different. Anytime you see a channel, the price is going to go up and down, hit the bottom of the channel, the top of the channel, and when it breaks up or down, it's going to start, let's say it's breaking down, it's going to start from the top, break down all the way to the bottom, retest the midline, sorry, I'm still using my mouse, retest the midline, and then break down, back up, retest the bottom of the channel as resistance, then die. Every single fucking time. That's how channels break down. And it's the opposite for how channels break up. That's as close to a fact as you can get in this business. Now, your task, my task, is to take that information, that understanding, and apply it to the charts. Properly set the channel, right? Don't assume that your channel is correct. I had a channel, but I had to if you notice, 2 episodes ago, I modified this channel because I had it drawn a little differently. I think I had it something like this. One of my clients noticed. I think I had it drawn like this. And I'm like, that doesn't make any sense. Here, this makes more sense. Do you see? Is that a cop-out? No, that's just, you're trying to fit the information you know, understanding you have, overseeing years, almost 10 years of charts and, channel trades on the 5-minute chart, the 15-minute chart, the hourly chart, the daily chart, the weekly chart, in commodities, precious metals, cryptos. Every single time, you've always seen that play out. You're just trying to fit that onto this, assuming that, yes, indeed, here, once more, you have a channel. This is how you should be using this channel, and I think a lot of you do, which is great. I'm just speaking to the minority of people who may just be starting in crypto, looking for information, how to make sense of this, and I understand that my analysis can sometimes get into the weeds, and it takes a while. It takes me a while, Not everybody has 30, 40 minutes. Not everybody has a passion for chart analysis. If you don't, maybe this isn't the channel for you. And I can see why people are like, what the fuck are you talking about? Like, you're wrong. I was just looking for if the price was going to go up or down or where it was going to go to. I'll say this, and this is not necessarily for me to to not take the blame or responsibility for my calls. My calls are my calls, whatever. But look at the how. Look at the method. Look at how the analysis is done. Then try and replicate the analysis or the methodology that's consistent. The outcome's the outcome. You have to be comfortable with winning and losing. That's part of this whole business. But understand the things that don't change, the basics, right? How does an impulsive move look like? How does an impulsive move retrace? How's wave 1, wave 2 look like? How does it form? Where does wave 2 come back to? What does a zigzag look like? How does it form? What's a flat correction look like? How does it form? What's it retrace to? What's a Wyckoff accumulation look like? What's a Wyckoff distribution look like? What's a Wyckoff spring? All these things you see time and time again. The more you study them, not even getting into Wyckoff or Elliott wave. What's a head and shoulders pattern, bearish reversal pattern? What's that look like? Okay, when do you see that? How does it form? Maybe you want to use volume, right? I wouldn't necessarily recommend it in crypto because it's not that reliable. That's another discussion for another day. But let's say you want to use volume. All right, what's the head and shoulders bearish reversal pattern look like? And what's the volume profile on that? Stuff like that, right? So here, I think you can see a semblance of a bearish reversal pattern. And I don't think it's an accident. And it's something you see time and time again. So these are the things you should look for in good analysis that keeps bringing up these basic tenets and applying them to what you're seeing on the chart. So if you're just looking on a high time frame at the Bitcoin dominance chart I just showed you, there's a lot of bearishness in this Bitcoin dominance chart. I'm going to turn on I turned on my favorite indicator, like indicator that's not like a chart, the stochastic RSI momentum indicator, right? I, in the beginning used the RSI, just, pure RSI. Then I used this because Sheldon the Sniper took a liking to this, and I also took a liking to this. I find it actually better than the regular RSI. So that became my thing, and I got used to seeing it. It's not a crutch. Never, I'll say another thing. I went for a period raw dogging charts, no indicators whatsoever, because I found myself needing the indicator, or else I was uncomfortable making an assessment of the price action. And I was developing a dependency on the indicators, and I was no longer using price action as the primary tool, and that's your primary data. So personally, just that's how I like to live my life. I don't like to depend on anybody, anything. I like to be independent, and I like to not form dependencies, addictions, or whatever. So I saw myself depending, like I needed this indicator to make sense of what I was looking at. And so I turned it off for a couple years. And I brought it back. And now I don't need it, but I turn it on from time to time. And what this tells you is your K and D lines on the daily time frame are about to cross bearish. That tells you that my analysis is seeing this as a three-wave corrective pattern. Three-wave corrective pattern, up, down, up, three-wave move, and now a resumption of this. So basically, look at this. A, B, C. That's a three-wave move. 1, 2, 3. Do you see how it's fractal? That can be a little confusing if you're not used to it, but every time you look at a move, there's a smaller move in that can be broken down, and then a larger move outside of that can also be broken down. The smaller move is part and parcel of the larger move. The bigger move is this A, all of this right here, A, B, C is B, and this is C. When I turned on my stochastic RSI momentum indicator, that's basically what that said. All these are daily candles. Basically, it's told me that the momentum is exhausted here, and this is likely to turn around. This is important. Don't forget why I came here. I came here because I showed you the others chart, and I said the others chart isn't really bullish. It's showing on a really small time frame a modest move up, kind of like Bitcoin, a modest move up, 10% maybe. But that's not why we're on PumpWatch. That's not why I think we have a window for a serious move in altcoins. The reason I'm having a PumpWatch and I'm getting excited is because this is telling me right here, this indicator, this Bitcoin dominance indicator is telling me that with a high degree of probability, there are going to be a slew of altcoins that best Bitcoin in market cap, that far outpace Bitcoin in market cap earnings in a single or couple daily candles. Do you see what I mean? Look at this. This is A, all of this is B. This is likely the next move. And it's not going to be, again, A, B, C. Remember, C is always W, X, Y, A, B, C. Y and C are always pure impulse. This was corrective. This is obviously corrective. This is your pure impulse. So that shouldn't take more than 1 or 2 days. Right now, I'm recording this on Thursday. We typically don't get big moves, but except in, when there's the liquidity of traditional markets. Based off of this indicator right now, if this plays out as suggested by the stochastic RSI momentum indicator, as suggested by the price action, right, which we did initially, we should get a big pump in the next day or two. That's why we're on PumpWatch. And my target, which I mentioned in the previous video, is right here. And the reason my target's right here is very simple. Remember, you do not break out of a channel except if you retest the midline and the bottom of the channel, or the top of the channel if it's a bullish breakout, but bottom if it's a bearish. So whatever you do here, you can't go too far because you're going to have to retrace no more than 62%. So what you can do, and what I've already done, is the reason I set this target twofold. I'm taking my Fibonacci extension or my Fibonacci retracement tool. I know if we do break down as I foresee, it's going to look something like this, with a retracement back to the golden pocket, not only retracing the move, but also retesting the bottom of this 100+ day channel as resistance. And then 100+ days are finally finished and there's no more side to side. Basically, that means altcoins are going to start clearly separating themselves from Bitcoin, and specifically the bullish altcoins, because what's going to happen is, you see the other chart is only teasing a 10% move. There are indeed certain altcoins that are only going to go up 10% or less, or 15%. But what this is telling us is the bullish altcoins, whatever they are going to start separating quite clearly from the bearish ones, from Bitcoin, and they're going to continue to do so as you're now entering a phase of impulse to the downside in this Bitcoin dominance chart. Okay, the second reason that this is my target, and I said in the last video that this is an alarm, for a general alarm for taking profits on your altcoins, because some altcoins may go up 200 to 500, 600%. That's not an exaggeration. That's what I'm seeing in the charts, and I already have a couple examples of that in my own watch list, not some random story on Twitter that somebody made. Some random asset went up this, like one of the few assets that my clients and I trade went up 250% in the span of 2 or 2.5 days. Okay, so the last reason, and this is the confluence, always look for confluence, is this is an order block. All right, there was buying here. Obviously we're looking at an indicator, there's no buying or selling, but you understand what I mean. Whatever happens, when we come down here, you're going to experience some temporary level of support. So that's confluent with what I just said about Bitcoin dominance falling down and then bouncing at that level, but then continuing to the downside. I hope that's clear why we're on PumpWatch. So Gaming Land M says, do you think the midline retest on BTCD is sufficient? Will we consolidate on the midline for long, or will it be quick violent move down from where we are? So the midline retest on BTCD is sufficient. I'm just gonna look at that really quickly. Yeah, I think this is sufficient. I'll tell you why. There's no 100%, right? You have to get comfortable with not being 100% sure about anything. We use those words: positive, sure, confident, but you also understand that you're in the business of probabilistically prognosticating. You do your best, and it's all probabilities. But there's a really high probability that that was indeed a proper midline retest. Again, because you're looking at a 1, 2, 3 wave move. And then on a higher time frame, A, B, C. Everything about this retest, from the structure on the daily time frame to the pinpoint accuracy of the Fibonacci retest. Remember, basic Elliott wave analysis. Flat corrections retrace to 78.6% of the initial move down. If I consider this my A wave, as I stated, and this all is my B wave, I need a 786 retest at the minimum before then retracing. Now look, that 7 in, just here, let's just put that back really quickly. The 786 Fibonacci retracement level is confluent with the midline of our channel. That's confluence. That is not a coincidence. It just so happens that the level that exhausts the B wave, or not exhaust, that needs to be minimally retested for a B wave in a flat correction is met at the very level where the midline is met. That's not a coincidence. To me, this is indeed your midline retest. And thus far, at least on the daily time frame, the rejection looks confidence inspiring. It looks encouraging. So yeah. So Mars NV1 EL asks, why take profits on the midline of BTC dominance is going to go much lower? No, you misunderstand. The take profit is not at the midline. The question was, is the midline indeed an accurate midline retest? Because we talked earlier how, we'd gotten it wrong on the others chart. Like we looked at a midline retest, what we thought was a midline retest wasn't a midline retest. We broke back into this 80 plus day channel, making it a 100 plus day channel. In any case, we were talking about the validity of midline retest. Like, we know you can backtest it. You can disagree with me all you want till the cows come home. Any chart you look at, whether in traditional finance, whether in crypto, you find a channel. If it breaks up or breaks down, it's going to retest the midline. There's no argument to be made about that. The argument is now, okay, how do you draw the channel, and what constitutes a good and accurate midline retest? That's what we're talking about. And so that's why he asked, is that a midline retest, right? But no, the take profit is here. And I explained why. Not at the midline. This is the beginning of the move. This is the end of the move. You're going to get a retracement here. So if you don't take profit here, you're likely to lose a lot of your profits in that retracement, because you cannot break a channel without first retesting the bottom of the channel or the top of the channel in case of a bullish breakout. And I'll say this, just looking at individual altcoin charts, many of them will make flat corrective retracements, i.e. 79% retracements. So if you fail to take profits on this run, you will be giving up 80%, 80+% of your profits. Mars says, thanks for your response. What I mean is, why take profit at 57% Bitcoin dominance if Bitcoin dominance is going much lower? You take profit because you're in profit and it's a significant move. I think it's just smart trading. Yeah, you can let it go, but why? Why? Every chart that's ever been printed with any channel, like I said, has always retested the bottom of the channel. So here's your channel. That's the bottom support. That's the top resistance. You just played in the channel for 100 days. You're retesting the midline right now, right here, and you're breaking the channel finally. Now, you thinking that it's just going to go in a straight line is misunderstanding how things go. Nothing goes in a straight line, right? This is going to retest the bottom of the channel. Am I saying that that's it? No, it's going to continue going down after that retest. But this right here, like I said, based off of my portfolio of that I'm trading with my clients, that I'm watching, my watch list, and that's probably like a couple dozen assets. Most of them are gonna do, the bullish ones are gonna do uh anywhere from 200%, most of them 200% up to 400, a few 400, and one or two 600, something like that. Why the fuck would you give up those profits? You see what I mean? Like, and knowing that the retest, like I said, if you look at the charts, you're putting in flat corrections, meaning if you make 200%, let's just say, you know, you're putting in one of those 200%, most of them are going to do around 200%. Why would you give up 70, 80% of those gains if you're in profit? Why? That's silly. You know what I mean? That's why. And not to say that you can't hold. There's nothing wrong with that. That's a strategy. But you know that's kind of the question. That's a methodology. That's a trading question, and it really depends on your portfolio size, what makes sense. But for most people, it makes sense to take profit here if they're in profit, because it doesn't make sense to give up gains that you know you're going to give up, right? We know on the others chart, we know on the Bitcoin chart, others chart hasn't made a midline retest. There's no way you're just going to keep going up. So most altcoins are going to come down a lot to make this midline retest. Take your profits, right? Same with the Bitcoin chart. We know that Bitcoin is likely to move back down to these levels before moving up. So, you know, take your profit. That's all. There's no wrong answer. There's no right answer. It's just, you know, most people, I would say, would benefit, and it would make sense for them to take profit at 57%. Yeah, of course. My pleasure. Thanks for asking the question. Because if you're asking it, I'm sure other people are wondering the same thing. Let's see. Let's just have a quick look. So Bitcoin's not, again, this is interesting. You're seeing Bitcoin very, very lukewarm at these levels. It looks like it's gonna bounce a little bit, but it's not very enthusiastically doing that. It's kind of showing weakness. Meanwhile, the others chart, let's see what it looks like. It's showing a little more strength. Not that much more, but a little more strength than Bitcoin at these levels. But we're still expecting a divergence in relative strength in altcoins vis-a-vis Bitcoin. All right, so that's it. That's the analysis. Guys, like the stream. If you're interested in my paid services, like, you know, you want specific altcoin analyses, that's either going to be through my single asset analysis service, which, like I said earlier, the turnaround is just a few hours, but I give myself 24 hours max, and I've never not delivered within that 24-hour window. You just make the order as per the instructions in the description, and you'll get that analysis back in your email within a few hours. That single asset analysis, and then obviously the full service is the crypto portfolio mentorship and consultation service, which is through the Buy Me a Coffee link, and that is the full service. You know, we have 2-hour long face-to-face meetings monthly, and you just have, you know, perpetual access to me by way through email, even when it's not time to do your in-person video conference. And that you can trade, you know, a full portfolio with me, and then we go into a lot of other things risk management, like things that are very important to trading, ancillary things like, you know, are you trading something else and you holding something else, how to get out of that profitably, and, you know, if you can, whether you should be holding X, Y, or Z, all that stuff. So that's that. And then last but not least, as always, I'm going to tell you about my leverage trading partners. But remember, leverage trading is extremely risky. It's extremely difficult to do. Most people lose. But these exchanges, what they do is they partner with people like myself who have audiences on, you know, YouTube or whatever other platform, and they try to funnel users through that. It's not nefarious, it's not wrong, it's just a business model. And I think it's fine if you understand what the business model is. Again, like I said, most people lose. The reason most people lose is because it's extremely difficult. And most people don't know what they're doing. And most people put all their eggs into that basket, which they shouldn't be doing, because leverage trading is not an exhaustive strategy for making it in crypto, right? Spot trading is, to be honest, right? Just buying and holding the right stuff during the right times, right? During these small windows of explosive pure impulse where altcoins greatly outperform Bitcoin, then, you know, everybody's a genius. That's where you make your money. That's where 95% of people who have made life-changing wealth in crypto have made their wealth. Some have made it through leverage trading, but that's few and far between. Having understood all of that, still interested in leverage trading and taking advantage of the bonuses that they give to entice you to use their services, and you're new to the platforms that I partner with, FAMX, Weeks, KCEX, then use my referral links to take advantage of those bonuses. That's pretty much it. Guys, take care. Good luck, and yeah, fingers crossed. I'll answer a few questions before we leave. So Gaming Land M says, how do you handle the mental side of things? So nerve-wracking. Yeah, I mean, one of the reasons I play classical music on stream is because that's what I used to calm myself when I traded, because it's people don't understand trading. Obviously it's not Formula 1, but it's a high performance exercise. You need to be in shape. You need to sit for long periods of time and just focus on one thing. And I train, do like breathing exercises, and not just for the sake of trading, but like I couldn't do this job without taking care of my body, like eating properly, sleeping properly. Like, it's extremely nerve-wracking. It's extremely difficult. And yeah, one of the things is I would play calming classical music to calm my nerves. ELMN KYTV says, thank you, you're welcome, thanks for coming. Rob Wilson says, 200% gain, let's say on Cardano at its current price, it's only 81 cents. My average is 53, which I think is decent given current conditions. I was hoping Cardano to go much higher. 200% gain, let's say on Cardano at its current price is only 81 cents. Rob, unfortunately, I can't look at Cardano precisely. But again, this is just an initial move. So whatever Cardano's at now, if 200% means 81 cents, then that's what it is. But again, the idea would be, if you're in profit, you take profit. But if you're not, then just wait. Because what you should see is, and what all the charts indicate is, this move happens, then a big retracement, and then things go into pure impulse. And we go much, much higher, much, much faster. So that's my answer to that, Rob. Similar to many altcoins, other altcoins, 200% doesn't seem that great given how things have dumped so hard. I mean, I can't really qualify that and say it's good or bad. It just is what it is, you know? It is what it is. Basically, the idea is this. I'll tell you, Rob, without divulging too much specifically about any particular assets. Look at what happened on October 10th. There was a big move on October 10th, a cascade of liquidations in the entire cryptocurrency market. That move is what we're working up against. If you look, and let me just draw it out. This is a little challenging for me given that I'm not talking, I can't talk about particular assets. And Rob knows. Rob was a client. Let's zoom out. No, this is confusing. I'm just going to move this out of the way. And I'm just going to draw this out. Okay. October 10th was a big wick. Most of the market did something like this since October 10th. That's about 140 plus days, last I checked. Okay. That's been the experience since October 10th. Again, when you're looking at corrective price action, think flavor of 3. If that move bounced, the liquidity was grabbed almost immediately on October 10th, and everything since that date has been a slow capture or recapture of that liquidity at these levels. Okay, and I'm saying this is what most of the altcoins look like. Most of the bullish altcoins. This move that I'm saying 200% on average, some 300, 400, some 500, 600. It's not good or bad. It just is what it is. You're completing that capture. Do you see? You're completing this sequence. Sorry. I'm going to make this a different color. You're completing the sequence. That's all you're doing. I would caution you, Rob, in your analysis, when you're doing analysis, don't think good or bad. The market doesn't see your good or bad. It just is what it is. And I'll say that not because I understand where you're coming from when you're saying you're qualifying it, but that's tough for you. It makes your analysis more difficult. And it makes it easier for you to see or want to see certain things, and it'll skew your analysis. We all have skewed analysis. We all want certain things. But again, this is kind of the trick. It's a constant mind game to try not to see what you want, what's beneficial for your portfolio or your client's portfolio, and rather see what's being presented. That's the only reason I say that. It's just a tip. So try and think objectively, and instead of thinking good, bad, think balance, equilibrium. All you're doing is recapturing that liquidity from the past 140 plus days and coming back to this swing high right here. That's essentially the analysis in large part, in sum, of most bullish assets. It's going to look a little different in different assets, but by and large, that is the calculus on this move, and that's why the targets are where they are. Now, last thing I'll say is this. Your retracement isn't all the way down here, not at all. Sometimes it's down here, around the midline of this, but sometimes it's gonna be 80% down right here. That's just what I've seen. So it's important, if you're in profit, to take these profits. But if you're not, don't despair. Understand that you're one move away theoretically, from a larger, more proper breakout. And that goes back to my larger analysis on the other chart and Bitcoin. Small move up, larger move down, even larger move up. Yeah. So hope that helps clarify. Awesome. Yeah. Thanks for coming, Rob. Thanks for coming, everyone else. That's pretty much all I wanted to present. Still on PumpWatch, the window's open, and if you're in profit, take profit. Use the 3 chart method that I presented in the previous episode. Because I think that would be helpful, right? Bitcoin gets in somewhere around the green box. Others chart gets towards the top of that move. That B wave should be exhausted around the top there. Bitcoin dominance gets to around 57%. All those should indicate exhaustion of whatever upside we're having in the market. And at that point, if you're in profit, take profit, because we're going down pretty significantly. All right, that's it. Take care.